देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म।
The kind of performance that we demand of our private sector has to have multifaceted criteria, not merely production.
It's D-Day, and in a few hours from now, Finance Minister Nirmala Sitharaman will become the first finance minister in India to present 9 consecutive union budgets. This amid current backdrop of downbeat equity sentiment, weakening rupee, but an improved sentiment in terms of consumption driven by GST cuts and income tax changes.
The Finance Minister is set to make changes to the traditional structure of the Union Budget presentation, with Part B of the budget speech expected to receive special attention. That's an exclusive.
Former policymakers expect overall capex hike in the 5 to 6% range and 15 to 20% growth in defence budget. They also expect the share of government borrowings in the overall budget to come down.
Former tax architects call for abolishing the securities transaction tax ahead of the union budget. Say it has outlived its purpose. Also calls for rationalising the customs duty framework and slashing the number of slabs from 8 to 4.
Amidst all of this, the US President Trump has picked Kevin Warsh as the next chairman of the US Federal Reserve. 55-year-old Warsh is a former Fed governor who has aligned himself with Trump's criticism of the Fed.
Well, in a few hours from now, all eyes will be on Parliament as Finance Minister Nirmala Sitharaman presents the Union Budget 2026, her 9th consecutive one. Expectations are high that the government will double down on manufacturing push, giving a fresh impetus to Make in India vision, with an expansion of the PLI scheme very much likely on the cards. The budget is also expected to prioritize stronger health and education infrastructure with higher fund allocations, while continuing its big bet on capital expenditure to keep the growth engine running.
And a key focus area will be putting more money into the hands of people to boost consumption demand, even as the government looks at further rationalization of customs duties and capital gains tax to simplify the tax regime. The big question, however, will be whether this budget can strike the right balance, stimulating growth and supporting consumption along with investment while staying committed to fiscal discipline. Prime Minister Narendra Modi has stated that reform, perform and transform remain the key objectives of the union budget this year. So let's listen in to the Prime Minister's comments to kick off.
देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं, बहुत तेजी से चल पड़े हैं। और मैं संसद के भी सभी साथियों का आभार व्यक्त करता हूं कि इस रिफॉर्म एक्सप्रेस को गति देने में वे भी अपनी सकारात्मक शक्ति को लगा रहे हैं।
Well, and let's tell you what we are picking up from sources ahead of the budget presentation. Finance Minister Nirmala Sitharaman is set to make changes to the traditional structure of the union budget presentation, with Part B of the budget speech expected to receive special attention. Earlier, budget speeches typically had a lot in detail in Part A, while Part B only consisted of a few announcements. This time, however, the Finance Minister is expected to speak in great detail on Part B.
And according to sources, Part B of the budget speech will place strong emphasis on both short-term and long-term goals, will reflect India's economic vision and priorities as the country enters the second quarter of this century. Part B of the budget will also offer the roadmap for showcasing India's local strengths on the global stage while highlighting India's current strengths and future potential.
All right, as we count down to the budget, well, in the next few hours, our colleague Timsi Jaipuria joins us straight from near Parliament to highlight the key expectations from budget today. Timsi, over to you.
Well, the Union Finance Minister is all set to table her 9th consecutive budget, a record that she'll be making. And this time the expectations are running high for the industry, what industry has been wanting. More measures to support Make in India, further expansion of PLI, more support on the PLI scheme. Also, on the other side, further boost to be given to the health and education infrastructure, more fund allocations on that side. The capex cycle needs to continue to boost the economy, and yes, not to forget, giving more money into the hands of the middle class and to the people so that the consumption cycle can see a boost, something that we'll have to wait and watch for. On the market side, well, investors are hoping that there could be some changes in the capital gains side. However, the government did make some changes in 2024 July budget itself. But yes, expectations are again running high. Whether these expectations are being met by the Union Finance Minister in her budget speech, that is something that we'll have to wait and watch for.
Indeed, MC, we will wait and watch for all of that. But amidst everything, rupee depreciation, that remains a big concern. Speaking on the currency fall, Chief Economic Advisor says the rupee is not an outlier. Here's what he had to say when asked on the impact of tax SOPs on rupee and the FPI flows.
Let's talk about the fact that, as you point out in the survey, the fundamentals of the economy continue to be strong, yet we've seen a significant depreciation of the rupee. You still believe that the rupee is not an outlier if you look at a longer-term horizon as far as the currency is concerned. But in your words, when we talk about investor reluctance and you call for an examination of that, is there anything in specific, any specific friction, pain point that we can address today to ensure that we start to see capital flows? FPIs, for instance, will it make sense to address tax-related issues at this point in time, or do you believe that that won't really move the needle much?
No, whether it will move the needle or not is not exactly in our control. But I would agree with the first part of your statement. We need to do whatever is in our limit, is in our capability to be able to do, which is to offer predictability, continuity, and stability of policies, whether it is tax or non-tax. And also, in terms of, we are doing that in terms of improving our geographical market access. If you locate in India, where all you can sell. I think we are expanding our geographical footprints by concluding free trade agreements. So whatever you mentioned with respect to policies, tax or non-tax, offering that predictability and continuity is desirable in and of itself. Now, whether that will guarantee an outcome, that is not in our hands. And that has never been the case, because a lot of other considerations influence investors' behavior. But if we keep doing whatever is in our remit to do so, I'm sure investors will take note of that. And in comparison to other nations, we will come out looking better, and naturally money flows will follow.
Well, and former policymakers expect defense capex to receive top priority when Finance Minister Nirmala Sitharaman presents the budget. The former budget architects told CNBC TV18 that while defense capex may see a hike of around 15 to around 20%, the overall capex growth may remain in single digits. Let's hear out those comments.
If you raise the total budget expenditure by 5 to 6%, and you have certain expenditures to take care in any case, like the interest, which grows at much more higher rate, and the Finance Commission recommendations would also be coming, which will require greater allocations for the state transfers, etc. In that situation, can you increase the capital expenditure as well as the other economic growth expenditure by a very large margin? I suspect that space is not there. So I would see that this, in my judgment, it will either be more or less at this level, or maybe a couple of percentage higher than that.
Okay, so single-digit increase is what you're anticipating as far
Lower
as...
single-digit.
Lower single-digit increase is what you're anticipating as...
The current year budget allocation is definitely going to be much higher than the previous years. And the growth in capex is definitely, in my understanding, going to be around 15 to 20%. And there is scope and potential to be a higher figure also.
Higher
However,
than 20%?
Yeah, because if the industry is ready, they are able to deliver what has already been ordered, the final expenditure outgo is going to be quite heavy, considering the type of platforms which are on order.
And that's not all. Former tax architects have called for abolishing the securities transaction tax ahead of the union budget. They say it has outlived its purpose. They've also called for a rationalization in the customs duty framework, as well as slashing the number of slabs from 8 to 4.
I think that is something that we can quite reasonably expect would happen in this budget. We are down to about 8 rates, not counting outliers. I mean, actually, there are outlying rates like 40, 70 and all, which I'm not taking into this reckoning. There would be moderation of rates. And my expectation is that the rates would come down to 4.
8 to 4.
8 to 4.
I believe that the STT must go. It is high time it should go because, now let me explain that. We brought it in 2004 as a substitute for long-term capital gains tax on equities. We reintroduced long-term capital gains tax on equity in 2018.
Yeah.
2 years back, we enhanced the rate of tax out there. Now, what we have is a situation where the long-term capital gains taxes are substantial, are fairly of a large amount. There doesn't seem to be any legitimacy remaining in continuing
STT.
with the STT any longer.
Meanwhile, Samir Arora from Helios Capital shares that he does not have any very high conviction expectations from the budget, while Nilesh Shah of Kotak AMC says that the budget will be positive if the government prioritizes on infra investment. Let's listen in.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs, which may be defined as some endowments or universities or long-term, some X thing. So what happens is if I keep thinking myself that it's so logical that long-term capital gains should be reduced, then I start believing it myself. So mostly my thinking is they will not do it. It for everybody. Don't do it only for FIs. Just reduce for everybody to 7.5 or ideally to 0. And you change STT a little bit because on the other hand, separately, we keep saying, although we own all these exchange stocks, that, the volumes are too high, speculation is too high. Just if you so want, or let it be for 5-7 years and then decide after that.
Do the trinity of impossible. Please continue to spend money on infrastructure because private investment is subdued. To fund that infrastructure spending and to maintain the fiscal deficit commitment which you have given, please raise money through non-tax revenue. It could be asset monetization, it could be strategic divestment, or it could be out-of-box idea like a gold disclosure, gold monetization scheme, which gives money to the government and brings gold, silver lying in the tijori into the bazaar.
All right, now you know what the street is expecting, what the policymakers are expecting, and at the same time, what the experts are expecting as well. Take a short break, come back on the other side. We'll get you what the market is expecting and what the market setup is on the other side of this budget breakfast.
Welcome back. You're tuned into Budget Breakfast here on CNBC TV 18. Well, as promised, let's get straight to trade setup. Well, Mangalam, the market mood has been a little bit subdued. let's get straight to the action.
Let's get straight to the action. It's one of those days, where it hasn't been spoken about the budget so much this time around. And that's because the mood of the street is like that. If you look at it, the Nifty, yes, for all practical purposes, did hit a record high in January. But from there itself, it's down about 4%. The Nifty Bank, which has been doing well, is down just about 1.5%. The problem point of the market is the IT index, which is down about 17%, and the big weight Reliance as well, which is down about 13% from the highs. And that's not all. The rupee is something that we're looking at in the broader markets. The mid-cap index is 5% of its lifetime highs. The small-cap index in the Nifty Next 50 down 14 to 13%, with more stocks, way more stocks down anywhere between 20, 30, and some even 40%. Is the rupee, which is a problem. Since the last budget, the rupee is down 5.5%, and the Nifty in dollar terms is actually down 6%. So that is a worry that we need to monitor going forward. And what the budget will have in terms of stemming the FII outflows is something that we will track as well, because all of 2025, the FII sold nearly 3 lakh crore in the cash market, and in January itself, they've sold a tenth of that, a little more than that, 41,000 crores. So all these factors actually should play on the mind of the street and the budget makers.
Well, that's right, Mangalam. I'm looking at a couple of other factors that are playing out. So, if you just look at it, the kind of decline that we have seen in precious metals, well, that's actually not so bad, because over the weekend you had gold as well as silver that came off drastically. I say that it's not so bad because, in fact, we have been seeing that a lot of interest, and because of the recency bias, there's a lot of interest that's moved to gold as well as silver. So it may not be such a bad aspect. But the FIs, as you said, they have been underweight in the cash market, and in the future space, getting into the event, they've added short positions with, in percentage terms, the short positioning at around 88%. And if we pull up the absolute number, it's at around 1.9 lakh contracts on the short side. So FIs getting into this event extremely net short, while the clients there on the opposite side, they're net long at around 1.3 lakh contracts. Not just the futures market. If you look at the options data as well, that's telling you the kind of writing we have seen on calls in comparison to puts. So safe to say that the FIs, they're extremely defensive getting into this event. But Mangalam, tell us about some of the key market triggers that you're looking at.
Yeah, beyond the budget is something that we will be tracking very closely, right? All eyes will be on what the finance minister says. But if you look at, some of the big triggers for the market, so far, the earnings season hasn't brought out big negative surprise. So there is a likely pickup that is expected in the second half of this earnings. And rural and urban consumption are at an inflection point. That's the sense that we get from all the numbers that have come by so far and all the data points and all the actions that the government has taken as well. Then there is this uncertainty around Trump, tariff and commodities. You did speak about how precious metals have come off the highs. So all these things will also weigh on the market. And above and beyond all of this, the very next week, we will have the RBI policy. Is there a rate cut coming or not? And the strategy of the new Federal Reserve chairman. All these factors beyond the budget will be important triggers for the markets to watch. But all eyes on the FM now here.
Well, that's right. All eyes on the FM. And I'll tell you what, the street will be wanting this capital expenditure push to continue. So the ballpark range we're working with is around a 10 to around 11% increase in terms of capex expenditure. They'll want the finance minister to continue walking the talk and, in fact, going ahead with that. And also, the feedback that I've got is a little bit of a slip on the fiscal deficit. That'll be par for the course, given that we want to revive the nominal GDP. So that's going to be the important aspect with regard to the key number to track. Otherwise, something for the stock markets. Remember, Mangalam, as you said, they've been selling in the cash market, the FIs. They're net short in index futures as well. And India has underperformed in comparison to the globe. So something in there, some tinkering of LTCG, STCG, maybe STT, put in something out there that revives sentiment both on ground as well as for market enthusiasts. But let's get to the levels to track that, Mangalam.
Indeed, Nigel. The market enthusiasts will be very happy if there is some sort of sop given to them in the form of tax, because if you look at the Nifty itself, it's down about 1,000 points from its record high, but it's flitting between, the 200-day moving average, the 20-day moving average. So all these factors we'll have to watch out for. 25,200 is an important support on the way down, and on the way up, you have the 20-day moving average at 25,635, and beyond that is the 50-day moving average as well. The lows on the Nifty from Jan 21 and Jan 27, just shy of that 25,000 mark, extremely crucial to support if the market were to sell off post-budget. And were the markets to move higher post the budget and cross the 20 and the 50-day moving average, all eyes will be on the previous record high, which is about 1,000 points from here. 26,373. Is the market going to go there or not? Well, Nigel, you've done some interesting analysis on the Nifty and the budget.
Well, Mangalam, the mood is subdued, which actually may not be such a bad thing. Because in the past, when we have seen that the markets pull back close to around 3% getting into the event, it's not been such a bad thing, just going by the returns that we've seen 1 month later. So maybe not such a bad omen to go into this event, with the FI short, the FI selling in the cash market, and the mood rather subdued. This time around, we're down close to 3% a month ahead of the budget. What holds for us post? It's going to be interesting. But if the markets need to move around, you have the big boy ITC that's always on your radar. What are you expecting this time around?
Well, the budget has to boil down to one stock. It eventually ends up being ITC, and this time around more so because we know the price tax hike that has come by. The stock is down 20% in January due to the big tax hike announced in tobacco on January 1st itself. So whether that is reversed or not, or is there any sort of SOP that comes in for ITC or not, is something that we will be tracking very, very closely. Why? Because this is a stock that moves anywhere between 5 to 8 and sometimes 11% on budget day as well, between the highs and lows. So we'll be monitoring the fine print very closely on account of whether there is any sort of reversal or revision in tax. If not, then the stock continues to be unabated and go down. But if yes, then it could be a big, big positive. But that's about, the trade setup that we're looking at in terms of going into the budget, what the market's expecting, what the finance minister is likely to do, and what the positioning of the FIIs are as well, Nigel.
What would you stick your neck out, Mangalam, and say that is it going to be a little bit of a positive surprise, or do you think it's not going to be a very big event?
Well, given the government's, trajectory so far, no tinkering is something that the street would like. Maybe it could be a positive surprise, largely because everything else is so negative, right? Everyone's worried about the rupee, everyone's worried about the market, the FI selling, all these factors. So let's see. I'm keeping my fingers crossed, and I hope everyone who's watching CNBC TV 18 and everywhere else, I don't think anyone's watching it anywhere else.
All right, Mangalam, but I think we have given market setup. Let's get in our very own Hormuz, who's joining in to help us out with a quick look at all those stocks that will be reacting to news today. Hormuz, let's get you in.
Well, it's the big day, right? And we'll be awaiting what the finance minister is going to announce. Right. But more than that, the usual suspects that should be on the radar as far the budget speech is concerned. And the fact is that you'll have to watch out for the big names, right? The defense space, of course, because of the defense allocation, the railway names, the kind of stocks that you'll be announcing there, and so on and so forth. But other than that, there are a lot of other announcements as well. There were earnings that came in. And look at Sun Pharma's numbers as well that came in on Friday. They were better than expectations. It was the India business that led the growth. The generic sales in the global markets were also better. They were in line with expectations. Margins expanded. So the stock did well. It should be in focus. Bajaj Auto's numbers were in line with expectations as well. The balance sheet continues to remain healthy. That's the big takeaway. The brokerages, though, continue to remain a little divided on the stock. Bank of Baroda's numbers, nothing much to write home about there. It was a subdued quarter for them. Asset quality has not seen any major significant improvement either on a sequential basis. Now, you take a look at a similar result from Cholamandalam as well. The core income was higher, 24%. Yes, but the asset quality has not seen any improvement. In fact, it has seen an even more deterioration, ever so slightly, but a deterioration nonetheless when compared to the September quarter. Even the provisions have gone up to as much as 3,000 crores for the ECL stage 3. Now, ESAF Small Finance Bank is one name. The stock had reported a loss of over 200 crores last time. They have turned a profit this time. And more importantly, the asset quality has seen a very significant improvement as well compared to the same quarter, compared to the sequential quarter as well. As you spoke about defense names, a couple of defense names. Bharat Dynamics is one name reacting to results. Profit has halved from last year. Margins have seen an even sharper deterioration, so keep that on your radar. Other reactions, of course, CDSL, GSPL and other names. Silver, Hindustan Zinc should be on your radar. And of course, Ola Electric, and keep an eye out on BSE as well after the clearance to the NSE IPO.
We take that point, Hormuz. Thanks a lot for that. Speaking about BSE and NSE, don't worry, we will be there. We're speaking to those decision makers out there. But before we do that, let's listen into Venugopal Gare, the Managing Director and India Head of Research at Bernstein. He lists out his expectations from the budget as well.
Certain tweaks, especially around LTCG, is probably warranted. It's not a very large quantum, especially the equity side of things. Probably government could have bans a couple of years down the line. So if you have more than 3-year hold or 4-year hold, maybe have the differential, taxes. I'm not expecting too much on consumption side of things. We've done a lot of things last year. And remember that GST impact of low collections will also be felt in this upcoming financial year as well. At this juncture, my thinking is that the government might want to bring it down by at least 10-15 basis points even this financial year. I'm basically saying that please don't cut it. Keep it at 4.4. If you were to just broadly look at the last 2 years, we've been doing sub 10% rate from a capex standpoint, because in 2024, we actually didn't grow at all. So anything above 10, in my view, is still respectable.
All right, all set for the budget. With that, it's a wrap on this edition of Budget Breakfast. You know where to stay tuned. Stay tuned to CNBC TV 18 for continued comprehensive coverage on the budget 2026. Thank you for watching. Thanks.